Gold is an amazing asset. No sane person is going to tell you that gold is a bad investment. Over the long term, gold is a phenomenal investment. But in this example, person number one has just bought gold for 20 to 30 years and is looking to retire by the time they're 50, 55 years old. On the other hand, we have person number two who has invested in a diverse portfolio of stocks, crypto, gold, property, alternative assets. Now, what is the risk between these two people? On one hand, yes, gold is a phenomenal asset, but if you look at the chart of gold price over the last 30 years, you will see that overall it has gone up in value. But if you look closer, you'll see that it has had massive troughs for maybe 5 or 10 years before it's recovered and gone up again. So imagine that you are person number one who has only bought gold and you're at the position in your life when you're ready to retire, but the price of gold is in a trough, is down right now. Yes, over a long enough time frame, the price of gold is potentially going to recover and beat many other assets and it's going to climb and climb. But if you're at a position where you're ready to retire and the price of gold is in a dip, you are potentially losing huge amounts if you want to liquidate at that point. But on the other hand, person number two who has been investing into a diverse portfolio of assets is going to be protected from that downside. Even if he wants to retire at the same time as person number one, because only maybe 15 or 20% of his portfolio is in gold, he is able to take from the other assets in his portfolio that are not in a trough, that are performing really well at that point. So make sure that you are well diversified. There's a huge amount of things that can go wrong if you are not well diversified.